Welcome to Impact Farming, where we introduce you to the people and ideas that will have a massive impact on your farming operation. Brought to you by Farm Marketer. Sit down, start the engine, and let's roll with today's show.
Why do you lift, strain, and sweat without ever punching in or out? Because you work in acres, not hours. And your best harvest is yet to come.
Hello everybody, and welcome to the Impact Farming Show. We are so happy to have you back on another episode this week, and I have a special guest with me. Her name is Edith Frison from the MNP office in Brandon, Manitoba. Welcome, Edith.
Thank you.
I'm so happy to have you here. So we are going to be chatting about some excellent accounting-based topics that I think are very important for our audience. And the first one I wanted to chat with you about is how the new tax on split income is going to affect farming operations.
Okay.
So why don't we dive right in and, well, actually, before that, two quick disclaimers. As with any accounting topic, it can be quite complex, and there's so many ins and outs and unique situations. When Edith and I were talking about doing this interview, we decided to keep it very high level. So here's what's changed. Here's how it's going to affect you guys as farm operators. Go see your person. So the point of this episode is to give you that heads up that something's changed, a rough outline, and then we can go from there, right?
Absolutely. Yes.
Okay.
It's very important to discuss your particular situation with your professional.
Farms are so different.
They are.
Each farm to the next, right?
Absolutely, yeah. Every structure is different, everybody's different, so it would be very important for everybody to meet with their accountant or their advisor to make sure that they don't fall into this legislation unintentionally.
Okay, perfect. So my next disclaimer would be, or more question to you, who needs to listen to this episode and who doesn't? Does TOSI only affect corporations, or is it private farms? Does everybody need to continue watching?
Well, it would mostly be folks who are incorporated who would see the impact of the TOSI legislation. If you're receiving partnership income, you could be implicated, but it's less likely. So it would be more corporations who've paid dividends to individuals out of the corporation, individuals in the family.
Okay, and there's a lot of farms that operate that way.
Absolutely,
nowadays.
there is, yeah.
And I have a sneaking suspicion that there's a few farmers that won't even know of these changes. So,
well, I hope not.
Well, I hope not. Needless to say, we're very happy to have you. So, why don't we start with TOSI? Okay. Can you explain what it is?
It's okay. So it's a new legislation. Came in 2017. 2018 sort of. It's effective, I guess, January 1st, 2018. And essentially what it is, it's the tax on split income. So in the past, we would structure compensation out of a corporation to a family in a manner that would ensure that the whole family paid the lowest marginal tax rate.
Right.
So I think the best example, or the most popular example we might see, is a student in university.
Okay.
I'm a farmer and I've got a kid who's going to university. How am I going to get them some tuition money?
Okay.
And because that student is attending university, they're going to have some special tax credits afforded to them by the tax legislation that exists always. So what we would do in the past is we would pay that student, that child, a dividend out of the farm, because a dividend never had to be earned in the past. It was always compensation for being a shareholder, or remuneration for being a shareholder, and it never had to be. They never had any rules around it in the past.
Okay.
So essentially, we would pay that individual enough of a dividend to use up their personal exemption, and then that exemption or those credits they would get because they were going to school. So instead of giving mom or dad an additional dividend and then they would give it to the child, which could push them into a higher tax rate,
right,
or overall they might pay a higher tax rate than the child would, we would give it to the child in a manner to try and minimize the tax in the family.
Okay.
Unfortunately,
bear of bad news coming.
This new legislation has closed the ability to split the income with other individuals in your family.
Okay.
Okay.
Just like multiple or just period?
Well,
We'll get
we're going to
into
get
that,
into
I'm
some
sure.
of the rules
Okay.
a little bit later. Yeah.
Okay, so I'll ask this quite politically correct, and you can answer. What was the government's goal behind doing this?
I'm not totally certain why the government makes certain policy changes or enacts certain laws. My thinking, though, or what I've read, is that they wanted to stop compensating individuals who are not active in the business. Okay. They want to make sure that everybody who's compensated from the corporation, and in this case mostly farms is who we're talking about, everybody who's compensated out of that farm actually worked to earn that compensation.
Okay, that makes sense.
Yeah.
And can I give a quick example? And
Sure.
Let me know, just to kind of loop everybody in here. So let's say I'm incorporated and I have a farm and I am the main farmer. Mm-hmm. I do all the farm work. And let's say I have a husband who has an off-farm job,
right,
and doesn't participate in the farm very much. So prior to that, I could have paid him a dividend, mm-hmm, and that would have put us in a lower taxation level, right?
Right, yep.
And now the government's going, well, wait a minute. He doesn't actually work on the farm, so you can't do that.
Right.
So any money that you take as a dividend is one person.
Right.
And hence, if we take the same amount, it's not spread over two, it's spread over one, and that would push me into a higher tax bracket.
For sure.
Okay,
Or most
good.
likely, I guess, depending on the numbers. But and that's part of the reason we say go see your accountant.
Right.
Right.
And we will say that a few times throughout here. But I just wanted to kind of loop it through, talk through it to...
In an example.
Yeah, in an example. And just so people at home, if they're incorporated or not, can just follow along with us. So... who does this affect?
It would affect anybody who received a dividend out of your corporation who doesn't actually do any work to earn that dividend.
Okay.
And the government, so you might say, well, what does active mean? My kid
Right.
sweeps the floor, my kid does a few things, and I pay him, a dividend accordingly. Well, when we're paying anything out of a corporation, it has to be reasonable for work performed, number
Okay.
one. And number two is they've come out with a bright line test that states you have to be involved in the corporation on a regular, continuous, and substantial basis. And so their guideline is about 20 hours a week.
Okay.
You would have to work at least 20 hours a week during the season of that business. So for farming, that would probably, be from seeding to harvest.
Okay.
Not necessarily in the winter, because there isn't 20 hours of work to do potentially for everyone during the winter season. So yeah, that 20 hours a week is sort of their guideline.
Okay. So that's who it affects. Are there, you kind of touched a little bit on stipulations and exclusions. Is there anything there?
So there's lots of exclusions, and this is probably the most important thing to discuss with your advisor. Okay. Can I fit into one of the exclusions? There are four very there's four very nuanced exclusions.
Okay.
The one I think I see people falling into most is that their children or the individuals they're paying dividends to are actually active inside the farm.
Okay.
So we're compensating them for work performed. They're involved that 20 hours a week. They're riding the combine, they're running the machinery, they're doing everything that would be required in order to earn income inside of that farm. So we want to make sure that anybody who's active in the farm is receiving the dividends. That's probably the most likely scenario we're going to see for you to be excluded from the TOSI legislation.
Okay.
One thing I think that people should do, and I'm not sure if they're doing this already or not, but if you do have children involved in the farm and you are paying them a dividend, my suggestion is that you document everything they do.
I was just going to ask that.
Yeah, and things like some of the examples Canada Revenue Agency have given us are things like timesheets, logbooks.
Okay.
Do they have an email address or an email account related to the farm and they're running the business from there? Anything else that you can document to prove my child worked at least 20 hours a week and these are the things they did, and we compensated them fairly for doing that.
Oh, excellent. Because just think, on the farm, you just go work.
I know.
Who keeps track of their hours?
I know.
At least at an office, there's a start time, end time.
I agree, yes,
at the
for
farm.
sure.
And if you get a year in and there's no real proof, and maybe they're going to university, that could be pretty gray, right?
It could be very gray, yes. And the tests that CRA have put out are not legislated. They're just their tests. And so that 20 hours a week is a guideline. But if you can prove that your child was actively engaged on a regular, continuous, and substantial basis, you might be able to do that with your documentation. So I definitely suggest people start writing things down.
That's a great idea.
Yes.
Okay.
Yeah.
Are there any other stipulations, exclusions you wanted to touch on?
There are a few other exclusions. They're way more nuanced, way more complex. So if you don't fit into that active scenario, definitely see your advisor. We here at M&P, for example, went through every single dividend paid last year by one of our clients.
Okay.
We filled out a spreadsheet, we looked at a checklist, we consulted with the clients, we made sure that anybody who could potentially fall into the TOSI legislation was advised that that could happen. So it's definitely, I mean, we've spent tons of time analyzing the dividends paid out of our corporations last year to make sure our clients are aware of the impact on their bottom line. So
that's a lot of work.
It was a lot of work.
Don't we love when the government changes things on us? Hopefully no government workers are watching this. Regardless, I'm sure they would have a laugh too.
Yeah.
Okay, so at the end of the day, we're talking about some changes to taxation levels and how this is all done. And I think one of the most important things to note is the difference in the taxation level can be substantial, right?
For sure. Like typically when we plan for farmers, I would think that they pay between 0 and let's say 25% tax on any given year as an individual.
Okay.
If you fall into this TOSI legislation, your tax rate on that dividend will be 50% or approximately 50%. So that's a huge hit to your bottom line in the future. And if you get caught, it's most likely going to be a few years down the road and they'll go back, you know, the 3 years and start looking at what was your dividend 3 years ago, and all of a sudden you owe that back tax plus penalties and interest. So it could be quite impactful to the bottom line if you fall into the TOSI legislation and you're not prepared for it.
Okay, so bear with me. Let's kick it 101 for Tracy here. So that example I was giving about my imaginary corporation for the farm that I have, that I pay my husband out of. So now you're saying instead of being taxed at,
let's say 20% or 25%, that the compensation you paid him as a dividend could be taxed at 50%. So you only pay tax at 20 or 25, whatever your regular rate is. All of a sudden now you owe 50% instead of, so it's an extra 25% of the dividend received that would be required to be remitted to CRA as the tax on that dividend.
Wow. So that really is, they're really trying to make it not in your best interest.
They want people to avoid doing it. Yep, for sure.
Because then that brings me down if I do that, but now it's taxed at 50% versus 25.
Yeah.
Ish, give or take.
Let's say,
yeah. Okay, wow. Did you guys catch that? That's pretty significant. So, okay. I think that walks us through, and our audience through, the main parts, the legislation, the name, TOSI. So if you guys go and talk to your advisor, your accountant, you can ask about it. It kind of gives us a general lay of the land and what's happening. Now, we're going to wrap the episode up, and if somebody wants to get more information, should they look online? Should they talk to their advisor? What's the best thing to do? Absolutely, talk to their advisor. If their advisor's unaware of the new rules, or they want some extra help or a second opinion, they can always call M&P. Any of our offices, we're very well versed in this subject matter. And we'd love to help your clients out. So yeah, absolutely. Look for us online or give us a call. Okay, excellent. Well, I think unless you have anything to add, that covers it for me.
I think that's it.
Okay, excellent. Well, thank you so much for joining us.
Oh, thank you for having me, yeah.
I'm looking forward to our audience listening and watching this episode because, wow, if we don't know, it can hurt us, right?
For sure. Yeah.
Good. Well, thank you so much for joining us.
No problem.
And thank you, everybody, for tuning in today.
You've been listening to Impact Farming. For more great episodes and articles designed to help you manage and grow your farming operation, head on over to farmmarketer.com. Don't forget to sign up while you're there. We will see you on the next episode.